Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Thursday, June 22nd, 2023. Before I click through all the charts, I just want to encourage you to please click like and subscribe and share the content with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly video analysis just like this that you see in the Tesla and Apple report every day, daily analysis in the Triple Q, in the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 week near term investor. Always looking for 20% moves on those underlying stocks. We put out 2 a week, all that one subscription package. So please check out wickedstocks.com. Let's take a look at the charts. Just a refresher, a reminder that 4 weeks ago, we settled above this long-term channel top that is now at 200.16. Our first big picture objective has been met. That is 274.53. This was considered a 2 to 3 month target, but we were open to the possibility of an accelerated move within 3 to 5 weeks, and it is the latter that occurred. We came off of 274.53. We did push through it just a bit, by about 1% actually. I mentioned that number yesterday. And so we almost hit it right on the spot and fell off. Fell off we did, actually. I'm going to take a look at the daily chart here. No, wrong daily chart. And you can see we actually put out a key reversal high on Wednesday. A new pullback high. We closed back below Tuesday's low. That in itself is a sign of an overbought market. I do have 258.15 today on the way down that you can see lower right, able to contain intraday weakness. Breaking or opening below 258.15 should yield this 245.04 to 246.82 region. I've reduced it to a 2-star support level only, because I do think, I'm going to jump back to the weekly chart right here. I do think that holding below this channel top now, as I've been saying now for several weeks, that once we test it, we can rotate all the way back to what is now a new channel bottom that we actually have drawn now at 178.89 and climbing. It will be the middle of, oh boy, I forgot to write the date down, but at some point over the next 3 or 4 weeks, these converge entirely. 200.16 dropping, 178.89 rising. This wedge actually converges entirely over the next month. And so the timing of that, could we fall all the way back into this narrowing 178.89 to 200.16 region over the next month? Yes, we can. Now, is it clearly indicated? No, not yet. But we did test the channel top. And these channel formations have a way of sort of drawing the market. We've tested the top. The bottom is calling, if you will, not destined to fall all the way back to this area. But, you know, as I've been saying, you may now, if you did take profits by buying those 270, 275 out of the money calls I mentioned a few weeks ago, if you took those profits, and if you're an aggressive trader who plays both sides of the market, you may now reach for 190, let's say, out of the money puts that don't expire for at least, I would go 3 months out on this. It could take the better part of 2 months for that collapse to occur. And once again, it's not clearly indicated just yet. I'm going to take a look at a daily chart here and show you what I'm looking at. There is this rising speed line at 237.74. I have it lower right here in the support resistance. It is climbing. A week from today, over the next 5 trading days, it actually converges with the mid 240s. So this region, 237.74 to 246.82, I have 254.04 as the lower part, but it really is, it's almost a 10-point range now. It converges entirely over the next week, and it is a zone, 237.74 to 254.04, that can absorb selling. Is with respect to, I'm going to go back to this chart. With respect to 254.04 to 246.82, we may test that today. In fact, it is indicated if we break or open today below 258.15, 254.04 to 246.82, able to contain selling through the rest of the week, we could come off of this area and back into the mid 270s again by the end of next week, following a test of 254.04. But it would be a settlement below 237.74, which is not going to happen today, and it may not happen between now and the end of next week. But if it did, this becomes sort of a stair-step proposition. Closing below 237.74, 219.69 expected within a week or two, closing below 219.69, expecting that low 200 area. So it could be fairly stair-step on the way down into the low 200s. Once again, I'm not expecting the low 200s, but you should respect this market's ability to give it all back into that zone of long-term support where we could bottom out through the rest of the year. And following a test of this channel bottom, you guessed it, we can rotate right back up to new highs, retest this channel top. That is the possibility. So I think that kind of covers the downside. Actually, if you like the daily Tesla report, a wickedstocks.com membership delivers regular daily video analysis in both the SPY and the Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Do yourself a favor and check out our other content by clicking the link below. There is one more thing I wanted to show you, and this is important for day traders today. We have a rising channel bottom at 262.18, and assuming we open below 262.18, this can contain daily buying pressures, and below which the potentially bearish effects of yesterday's key reversal high are firmly intact. Holding below, opening below 262.18 will keep the mid-240s in reach today, which once again forms the start of a range down to 237.74 and rising and converging over the next week that can absorb selling into next week, and we can rotate back up from there. If we were to close below 237.74, we enter another sell signal into the lower 220s, 219 and change, so forth and so on, potentially back into the very low 200s. Now, upside today, if we push or open above 262.18, especially if we open above 262.18, because after all, we did not close below this formation, and so opening back above it should provide some degree of recovery, upside pressure. 269.65 then in reach. That is actually a 5/8 upside Fibonacci just in the last 24 hours from Wednesday's high to Wednesday's low. Back up 5/8 is 269.65, likely to contain intraday strength. If we push through 269.65, we should retest the 274.86 rising channel top on the daily chart. Once again on the weekly chart at 274.86. 270, no, that is the daily chart, sorry. On the daily chart at weekly chart 274.53, daily chart is 274.86. This formation on the weekly chart 274.53, on the daily chart 274.86. So, what about that? What about this 274.86? What if we close above it? Now, as I've been saying, this is a weekly chart. Weekly charts have a sort of degree of finality, a degree of closure to them. As I often say, we can close above and below these formations within the week, and you can act on those signals. But clarity fully emerges if we were to settle tomorrow, the week itself, above 274.53 by a 1% margin. I have it noted here as 277.27. That is a 1% push through 274.53. And it would be a settlement tomorrow, Friday, end of the week, at 277.27 or higher, 1% beyond this channel top. That would signal bullish continuation into July. I would expect then within probably 2 to 3 weeks, 313.60 to 314.66. And really by the end of the year, if we close above 274.53, that 414.49 all-time high, then likely by the end of the year. Now, as I've said before, that settlement a month ago above 200.16 carries with it the possibility and the implication for 414.49 in the months to follow. But it would be a settlement above 274.53 that would maintain an accelerated upside pace as we move into the later year. 313.60 to 314.66, just a hesitation area really for a week, possibly a month, before presumably continuing on to 414.49 over the months to follow. You know, I think I have said it all. I'm 8.5 months into this, 8.5 months, 8.5 minutes into this. Might feel like 8.5 months to you, but 8.5 minutes into it. I'm going to leave it as it is for Thursday's Tesla report. I'll be back tomorrow with Fridays. You have a great day.